Welcome to the podcast, everyone. Today, we have a special guest, Alex, a seasoned financial analyst, to help us dissect the technical aspects of Oracle's stock performance. Alex, welcome to the show.
Thanks for having me, Jamie. Excited to delve into this.
So we're looking at a set of 9 charts here, each providing a different lens into Oracle's stock behavior. Let's start with the first one, the price trend chart.
This chart shows a clear upward trajectory from September, peaking around mid-October, where the price reached approximately $185. Since then, the price has corrected downwards, currently trading around $169. The death cross pattern, where the 20-day SMA crossed below the 50-day EMA, is a bearish indicator, suggesting potential further decline.
The second chart, on balance volume, seems to echo this sentiment.
Precisely. The declining OBV since mid-October indicates that selling volume is outpacing buying volume. This suggests that bearish sentiment is gaining traction.
Moving on to the MACD chart.
The MACD line has crossed below the signal line, generating a bearish crossover. The MACD histogram is currently negative and widening, further reinforcing the downward momentum.
The RSI chart shows a significant drop from overbought territory.
Yes, it's nearing the oversold threshold, currently around 38, hinting at a possible short-term price rebound.
The Bollinger Bands chart shows the price breaking below the lower band.
This often signals short-term oversold conditions. However, with the price remaining below the 20-day and 50-day moving averages, it could also indicate the start of a stronger downtrend.
The stochastic oscillator chart also points to oversold territory.
Indeed, both K and CENT-D lines are below 20, suggesting a potential short-term reversal.
The Williams CENT-R chart further confirms this oversold condition.
Absolutely, it's hovering below -80, aligning with the oversold signals from RSI and stochastic oscillator.
The ADX chart shows a weakening trend.
The declining ADX indicates that the previous uptrend is losing steam, consistent with the observed price correction.
Finally, the CMF chart shows negative money flow.
This signifies prevailing selling pressure, supporting the bearish view.
Overall, the technical indicators paint a predominantly bearish picture, with potential for further downside. However, the oversold conditions could trigger a temporary price bounce.
It's crucial to consider these indicators alongside Oracle's fundamentals and broader market trends.
So Alex, based on this technical overview, what kind of strategies might investors consider?
Well, that depends on their investment horizon. We can look at this from both a short-term and a long-term perspective. Given the oversold conditions, a short-term trading strategy could involve looking for entry points during a potential bounce. If the price rises back above the 20-day SMA, for example, it could signal a short-term bullish reversal. However, this is a higher risk strategy. Traders should set tight stop-loss orders below the recent low to limit potential losses if the bounce fails. From a long-term perspective, the current price correction could present a potential buying opportunity for value investors. If you believe in Oracle's long-term prospects, particularly its growth in cloud infrastructure and AI, then buying during this dip could be a sound strategy. However, it's important to consider fundamental analysis alongside these technical indicators. Look at Oracle's earnings, revenue growth, competitive landscape, and overall industry trends. Long-term investors should be prepared to weather short-term volatility and focus on the company's long-term potential.
So the key difference is time horizon and risk tolerance.
Exactly. Short-term strategies are about capitalizing on short-term price fluctuations, which inherently involves higher risk. Long-term strategies are about investing in a company's future potential, focusing less on short-term market noise.
Based on the current technical picture, what is your price target estimate for Oracle?
Given the bearish signals and the potential for further downside, I would set a conservative price target of around $155 in the short term. However, if the oversold conditions lead to a significant rebound, the price could potentially retest the 20-day SMA, which is currently around $179.
So, you're suggesting a cautious approach in the short term with a potential for further downside?
Yes, the current technical indicators suggest a cautious approach. However, it's important to monitor the market closely and adjust your strategy accordingly.
That's a great distinction. Any final thoughts, Alex?
Yes, it's crucial to remember that technical analysis is just one piece of the puzzle. It should be used in conjunction with fundamental analysis and a solid understanding of your own risk tolerance. And remember, past performance is not indicative of future results. And finally, if you found this analysis helpful, please consider subscribing to our channel for more market insights. Also, we're always looking for suggestions for future topics. If you have a particular stock or market sector you'd like us to analyze, please leave a comment below. We'd love to hear from you.
Great advice, Alex. Thanks for joining us today.
Thanks for having me.